today session is mainly related to for short-term traders, and we will only talk about the tradings, and we will share the view for 1, 2, or maximum 3 days. This session is not for the investors. So if you are an investor, you can log out, right? And if you are a trader, you can be here, right? So first thing first, we'll talk about Nifty and what will happen to Nifty going forward till expiry. So this view is only valid for next 4 days, right? So to start with, I'll tell you, we have a prop model where the Nifty has already given a buy signal at 15,800, and the second buy signal came at 15,960, and the Nifty is still in the buy zone. And that's why, if you guys can recall my last week Twitter space where I clearly thumbed the table and said the market is a screaming buy, and I told you clearly that FIs were reducing shorts and they were going long in stock futures, and all the data I have put it in public domain for your consumption, and I hope that view helped you in difficult times. So that view was clearly I put it on Twitter, and I hope all of you are on the right side, and tomorrow you may have a gap up opening. But this news was like somewhere down the line was known to few people well in advance, and that's why you rallied hard on Friday. So maybe after 100 200 points gap up, you may see some profit booking on higher levels. So again, it's a good from 15,700, and if you manage to see, let's say 15,000 sorry 16,500 on the Nifty, it's a good 700 points rally in 4 5 days, which is a very good money for short term traders. So there you can book 50% of your profits, and you can trail your stop loss 6 to 16,180 or 16,200, so you should not lose your capital. So this is the one way to approach the market. But this interesting data which I want to share with all of you, right, which is very very important. The interestingly, why I'm not bullish because of the news, right? I'm not bullish because the government has. This is a good news for economy. This is a good news for normal people, middle class people. They will, and they are facing serious problem on the inflation side, so they will get some relief. I'm really happy for them. I'm not happy for the markets, to be honest, right? We, you, everybody who are playing in markets or investing or trading in the markets, we don't care for that 500 rupees month extra monthly expenses or fuel and all, right? The people here, in one lot of Nifty lose 2 lakh, 3 lakhs, or they make 2 lakh, 3 lakhs. For them, 500,000 rupees in a month is not a, big deal at all, right? So I'm happy for general public, lower middle class, basically the lower middle class, and the farmers will be also, consuming less diesel and petrol, and they will be having some kind of a advantage, right? So government has done very good step for lower middle class people, to be honest, and maybe by this step even the overall inflation will also get controlled, right? So hopefully this is a very good decision. And one thing is very very clear, which we need to understand: this government is serious about markets and inflation. They don't want inflation to go beyond a point. So this is one. Second, now the RBI will take this government stance very positively. And in next RBI meet, maybe RBI will go slow on rate hiking process. So this is the point number two. Point number three, which is very, very interesting. These government and policy makers, they know few things in advance than you and me, right? So maybe they are aware that the crude prices will go down, and that's why they have cut the duties. Who knows, right? They must be having some clue that this war will end and the prices will come down. XYZ reason, right? I don't know. And suddenly you will see the crude prices coming down, and government will start, not will not reduce the rates to that extent, and they will gain back all the money which market is anticipating. Government will have to make a expenditure budget of 1 lakh crore plus, right? So all those numbers will go for a toss. The negative people thoughts will go for a toss. So this is my base case. I'm thinking in these directions, and I'm sharing my mind, right? What I'm anticipating in next 15, 20, 30 days. So right now, we got few good news in terms. States are also reducing and joining the party, which is a very, very good news for on the inflation front. Now, the interesting price action we observed on Friday in US market, that Dow, after going down some 500 points, closed in green. Same with S&P 500 and all. So Dow is showing some kind of a positive divergence on daily charts, which is quite positive, and chances are Dow may rally some 1,000 to 1,500 points this week. So it's roughly a 4 to 5% kind of a rally we are expecting this week. So expiry week. So chances are you may have a decent expiry in India as well, right? So this can be a very well case. So be prepared for that, and definitely you have to keep your stop losses, and you have to keep your target. If any negative news flow is hitting you, you better exit your position. But this is the base case for expiry. We may see higher expiry in next 4 5 days. Now come to the bank nifty. Bank nifty, interestingly now, HDFC Bank is showing some strength. Kotak Bank is showing some strength. So hopefully these are the two, and ICICI is already a stronger bank in bank nifty. So bank nifty may outperform. IT may also make a comeback for next 3 4 days because enough of the selling has happened. So these two sectors may give some kind of a boost to your nifty, and then you have a auto which may rally tomorrow or in next 4 5 days. They auto stocks may rally really, really big time. So keep a positive stance on auto stocks. Apart from this, I will tell you now the FII's positioning, right? So just hear me out very, very carefully. In last 30 days, in last 30 days, if you go or let's say forget 30 days, this expiry started on 29th April, right? 29th April, which was Friday, right? On that day, if I'm not wrong, if I were having a position in a stock future, how many contracts? Let me get that Excel sheet going for you. Just a sec, huh? Just a sec. Let me pull out that Excel sheet for you, if I can. Just a sec, huh? Let me check the stock future position for FII on that day. And I spoken about the data on Twitter. And if you go on 29th April, the start of the series, the day one for the series. On that day, FIs were having only 1,10,719 contracts in stock futures on the long side. Only net long of 1,10,719 contracts. Right now, as we speak, as on 18th May 2022, in last 14 15 trading sessions, because Saturday Sunday, if you account for 3 weeks, 6 days are holidays. FIs are having on 20th May, FIs are having a stock future long position of 2.44 lakhs. This is just remarkable. So FIs added a long position of 1,34,000 contracts in last 20 days. So what they FIs were doing at that point of time, they were essentially selling in cash markets and they were buying in stock futures market. I'm only talking about stock futures and index future here because for options the data will change on weekly basis because expiry every week expiry happens. So you cannot extrapolate that data beyond a point. So you have only two data points, the serious data point, which is FI stock future data and FI index future data. So the interesting part is FIs added 1,30,000 crore, 1,30,000 plus contracts in last 20 days. And the best part is that this is FI's highest stock future long exposure in the market in last 20 days. They are sitting on highest stock futures data. So this is a bullish position. Now, contrary to that, at the start of the series, retail was having 13,41,612 contracts long in stock futures. Right now, retail is having only 12 lakh 7,056 contracts futures position. So whatever the FIs have bought in last 20 days, the same exact kind of a selling has happened from retail oblique client audience, which includes family office, private limited companies, and all those stuff, HNIs and all, right? So FIs were slowly covering their shorts, and retail was slowly giving up their longs, booking the losses. I hope I'm making a lot of sense to you guys. Now, if you want to see, here the future index data, which is very, very interesting. So let's go 10 days back and see. FIs were having shorts worth 96,000 contracts in future index. Now they are only having on 20th May 38,000 future contract short in index future. But the interesting part is that, can you believe this? In index call options, retail oblique client is short by 1,56,000 contracts, which is roughly 70 lakhs call is shorted by client oblique retail, and similar amount of even higher than that, 1,75,053 calls, 1.7 lakh call is roughly if I bought in last few days, right? On Friday itself, FIs bought 80,000 contract call options. So roughly they bought, if you account for Nifty and Bank Nifty, because Nifty lot size is 50, Bank Nifty lot size is 25. Exchange give you always the combined data. So if you do the 50 plus 25 is equal to 75 divided by 37 lot. Effective lot size is 37, but not. That is not the case, because you see more in open interest mainly in Nifty, and you see lesser open interest in Bank Nifty. So effective lot size is around 44 or 43. And if you do the math, FIs are roughly having a net, long position in call options, roughly, if I'm not wrong, 75 lakh call position, 75 or 80 lakhs long call positions. So FIs are in short term position for a bullish upside. And retail, though retail is long in index future by some 65,000 contracts. So what retail has done, retail has gone long in index future by 65,000 oblique client, but they are short almost 3 times in call options. And on contrary to that, FIs are short in index future 38,000 contracts, and they have gone long some 1,75,000 contracts. Some of you may find it complicated, but this is the real game. If you don't understand, you'll not make money in life. If you want to make serious money in index, options, or derivatives, you have to understand this data. If you don't understand it, you'll not make money in short term. So what FIS has done, they are still short index by 38,000 contracts. If you multiply by 40, so roughly they have 18 lakhs index short positions, but against that 18 lakhs, they have 75 lakhs or 80 lakhs call option long. So against one future short, index future short, they have bought 4 calls. So this is just a huge bullish position, right? You cannot discount that. So this is on the Nifty side, and similarly on the Bank Nifty side also, because the data is valid for Nifty, Bank Nifty. So clearly in last 10 days, FIs were not shorting. What FIs were selling in cash markets and they were buying in future markets. This mechanism is called reverse arbitrage. So you want to cover your short at a lower price and you want to build some long position at lower price. That's why you sell some stocks in cash. So this is the one big game you have to understand as a market participant. Now I'll talk about few stocks where we are seeing some price action on the positive side, and you have to wait for few seconds for that, because I'm just running that screener for you guys. So one stock I clearly see right now, which is in some kind of a momentum, is Hindustan Aeronautics. Though stock has rallied a lot, but maybe this is the one stock which is on my radar. If the stock dips by another 3 to 5%, I may buy this stock. The second stock is Bharat Dynamics, again looking strong from the defense play. And overall, the chart structure is like EMA 10 is greater than EMA 21, EMA 21 is greater than this kind of a chart structure is there. So second stock, which I am liking. Third, very defensive stock, HUL, looking good to me. So this is the third one. Then you can look at Kotak. Then you can look at your four is fine for you, right? So four stocks, they are looking good, and they may do well this week. The one stock which is again from a PSU basket, I don't know why the Petronet LNG is showing so much strength. So maybe some news flow, or I don't know, but Petronet LNG is showing so much strength, so you need to study that company. That's it. Five companies you can track for this week. If I find any interesting name, definitely I'll put it on Twitter. Bhale has reported a very good number. Bhale, right? But again, a laggard stock, but showing some momentum on short-term charts. Reddington reported a decent set of number. Then what? That's it. So again, market is overall positioned bullish from the FIS angle, right? And if the market is managed to hold 16,200 for tomorrow, then you may see higher levels. You just stay away from steel stocks for a couple of days, let them settle down, because this news flow is little negative for steel stocks. They may bottom out at 11 a.m. also, in 2 hours also, but let's wait. We will buy a little higher. We are not in a hurry. So one sector to avoid is steel for 2-3 days, not more than that. After that, the buyers will return. Rest, we are good. Nifty, overall, if you see the Nifty fundamental triggers, Nifty is trading at the PE of 20, which is at the lower band of the valuations. And I'm expecting US inflation to go down. In the US inflation data will come on 10th June or 11th June. That number will be somewhere around 7.2, 7.1, which is quite lower, which is as per my expected line. And US bond yields are not going up. Dollar index is coming down. So overall, a very good environment for a trader. But surely you have to keep a stop loss as a trader and keep booking profits, because still Nifty is below EMA 21, EMA 63, EMA 200. So short term to long term trend is surely down, but you are not in a bear market. This is a sideways consolidation market where this market may go through another couple of months of time correction, and then it will give you the bigger breakout. So that's all from my side for today. I wish all of you all the best for tomorrow trading, and if we find anything interesting during the market hours, we will definitely share in Telegram channel, and as well as on the Twitter. But now the option data and all these Excel sheets is not possible on Twitter, so we'll share it um, uh, uh, in our Telegram channel. So good night, all the best to all of you.